So, Zcash has gone from the lows of $20 in 2025 to a current all-time high of $750. And why is that? And in this video, we will figure out why, and we will also figure out how to gain exposure to this coin so we're not left sidelined when Zcash decides to go on another parabolic run. Fundamentally, this has serious ingredients to run to crazy valuations during the next crypto run. And that's because the privacy narrative is heating up again, with AI surveillance, wallet tracking, quantitative computing, transparent blockchains becoming more common. Investors are they're starting to value privacy again, and Zcash is one of the biggest names within that sector. They are also gaining institutional attention as well, and it's growing really fast. Reports recently revealed that the major crypto funds like Multicoin Capital have been accumulating Zcash, while Grayscale has pushed the idea of a Zcash as a serious privacy hedge in the AI-driven world. Another huge catalyst is regulation. Unlike other privacy tokens, Zcash has optional privacy and selective disclosure features, meaning it's remained listed on more compliant exchanges while other privacy coins face delisting. That's becoming a massive advantage. Just like XLM, for example. And on-chain data is showing real adoption. Shielded transaction usage is rising, and around 30% of the supply is now sitting in shielded pools, creating a much tighter liquid supply than most people realise. And as I mentioned before about the institutional involvement, we also have the ETF speculation. Traders are now talking about a possible spot Zcash ETF conversation and broader institutional access, which has massively amplified momentum and volume. Right, now let's look at price action to try and get the best possible entry so we have exposure when this decides to go on another parabolic run, and also so we're not left holding this position underwater while Bitcoin decides to chop more. So we have some clear resistance around $700, and price is currently 29% down from all-time high. So first, let's try and gather some quick and simple support and resistance levels. We'll grab the Fibonacci from the swing low to the swing high, and we can see the golden pocket, which is normally a good buying opportunity, the 0.618, currently around $400. So we can use that as a good base point. That is currently another 25% down from here, and in total that would be around 46.63% down from its all-time high. So yeah, that could be a good DCA point. But if we look at the overall broader macro structure of Bitcoin, I believe that the whole crypto market is likely going to go down significantly more. So from this high to the lows before the recent bounce, it dropped 75%. History doesn't often repeat, but it does often rhyme. And I'm not going to say it's going to drop 75% down again, but it's just something to be very mindful of. I'm not going to say Zcash is just going to be down only from here, because it's not. If you're currently holding a position that you're looking to exit, don't panic. If you're looking to hold a short-term position, don't panic. We are currently around the yearly open, which does more often than not offer some type of support. So if Bitcoin does decide to play ball and this does decide to run its highs, then we could likely hold the yearly open and potentially go for another run of the local high. And if you are holding a position that you're looking to get out of and possibly look for a better entry, there will be your opportunity. So look for a bounce around the yearly open. Right, so let's flick on some EMAs to see if we can gain some extra confluence to that 0.618 Fibonacci. Here we can see the 12 and 21 EMA, which are often respected as support and resistance. And as you can see here, it was resistance. Again here, resistance. And you can see here the bullish EMA crossover, and it was then held as support. So if the yearly open doesn't offer any significant bounce and we do fall below, we could potentially look at something like this. The 21 EMA on the weekly is currently aligning up perfectly with that $400. So if I were you and you're looking for a DCA point, $400, in my opinion, would be a great place to start. So now if we flick over to the daily, this tells me that we're going to likely see some more downside. Again, if that yearly open doesn't offer any type of relief. We have now fallen below the 12 and 21 on the daily. As you can see, it is a respected support, and it was also a resistance until it flipped it. Support again there. And now we've fallen below, and as you can see, these two wicks here are rejecting it. So again, that also aligns with the fact that we could potentially see a pullback down to that golden pocket and that 21 EMA on the weekly. And again, let's see if we can gain any further confluence here on the daily. Let's flick on a moving average, which again is often very respected. Here we can see the 200 moving average, which is normally a big support and a big resistance, sitting just below that 0.618 Fibonacci, around $383. So again, that aligns perfectly with a potential DCA point of around that level. So if you are expecting further corrections in the crypto market, you could look lower than $400. If you're going to look at this structurally and seeing that as a higher, you can also look at that as a potentially lower high. So we're going to talk about coming even further down than $400. My next point would be the 0.786 Fibonacci, which is currently around $305. And as you can see, it is very respected. Here we go. It offered good support here. It fell below, and then it became resistance, deviated above, before falling back below. And then we had that impulsive move past that level, back down for the retest here. And then we had that next impulsive leg up. So I will certainly look at around $305 as another good DCA point, especially if you are expecting lower prices across the market. So to conclude this video, we have decided that $400 and $305 are going to be great DCAing opportunities, especially if you're expecting lower prices in the crypto market. Again, don't rule out a potential bounce around this yearly open to potentially take out these highs. I find it hard to see a scenario where the crypto market decides to just run parabolic, where we're going to take out $700 and then head into the four figures. I can't see that happening anytime soon, but I certainly can see it happening at some point in the near future. So what I can see happening is a potential bounce around that yearly open, potentially take out those highs, come back down. Maybe $400 would offer, the lows before it does run parabolic into the four figures. However, we can come back below and, tag that 0.786 Fibonacci around 305, and that potentially be the low before the next run. Either way, if you DC a pot there, DC a spot there, you have your average somewhere in the middle, and in my opinion, in the midterm, that is an excellent buying opportunity. But I certainly wouldn't go all in with those spot buys. You always need to have some type of dry powder in case the market decides to shock anyone even more, just like the event in 1010, and run even lower. So, for example, if we do come below this Fibonacci, we can see plenty of support around 195. So you certainly do want to leave yourself some dry powder for a potential downtrend towards that level. So I hope you guys enjoyed, and I will certainly start doing this more often on popular altcoins. I don't have a position in ZCASH currently, and I will be looking at taking my own advice and potentially DCAing at these levels I have mentioned. Until then, I'll see you soon.